So, Warren, I want to ask you, what is it about this event that has brought you back 3 years?
Well, in St. Paul's Cathedral, they have that tribute to Christopher Wren, it says, if you seek his monument, look around you. Well, I would say look around you. That answer, 300 women, powerful too. But actually, the most powerful of all, of course, is Patty Sellers. And I'm not sure at Fortune that you realize quite how powerful she is. You probably haven't heard about that incident back in the Clinton administration.
I don't think so.
Well, you remember the president had that incredible assistant, Betty Currey.
Uh-huh.
I mean, she was unflappable. And she came into the office one day, tears pouring down her, totally discombobulated. The president had never seen her like that, and he said, Betty, what in the world was the problem? Betty said, I've done something unforgivable, Mr. President. And the president said, nothing can be that. What was it? She said, well, a few months ago I scheduled two people. And accidentally, I scheduled them at the same time. And they're both sitting out there right now. The president said, well, that's hardly a criminal offense. He said, who are they? And she said, well, it's the Pope and Patty Sellers. And at that point, the president turned white. I mean, he was not prepared for that. And he put his head in his hands and finally looked up and he said, Betty, he said, show the Pope in first. I just have to kiss his ring. So Patty is a very, very powerful person.
Oh, that's great. Well,
moving right along, yes.
But I do want to remind everybody of the circumstances of these last 3 years. We're moving now to serious conversation. 2 years ago, in 2008, we were at the height of our peril. It was terrible. You just made your investments in Goldman Sachs and GE, adding to the confidence beyond the borders of those companies, I would say. A year later, in 2009, we had moved back from the brink. People were feeling better, partly because the stock market was up. And now here we are today in a pretty unsatisfactory shape. I want you to argue with that as you will. But we have enormous concern in the country. Public confidence is very low. Importantly, because the job picture is highly discouraged, and people are worried and sometimes very angry. So journalists learn that they're supposed to go from the general to the specific. But I'm going to reverse that today and ask you about Berkshire Hathaway, because you own 63 companies.
Actually, more than that.
63?
Okay. Yeah. Well, I lose count, too.
Oh, okay. And they range from industrial to transportation to, very importantly, insurance, to housing-related companies, a lot of those, to pure consumer companies like See's Candy and Borsheim's. And more than any company that I know of, Berkshire is really a microcosm of the economy. So for a start, what does the state of your company tell you, of these companies in your company, tell you about the economy?
Well, most of the insurance doesn't go with the economy. But if you look at the rest of the businesses, overwhelmingly, they're coming back, with the exception of the ones that are directly related to home construction. But if you look at our railroad, for example, and our railroad is typical of CSX and we've got the Burlington Northern, the Union Pacific, and the Norfolk Southern. All four big railroads. And railroads move 42% of the intercity ton miles in the United States. Our peak car loadings were 219,000 cars a week. They went down to 152,000 a week. They're back up to 190,000 a week. So they've come back 61% of the distance they went down. And we net, throughout Berkshire, are hiring people every week, but not at a fast clip. So the economy is coming back. Most people feel that it's not coming back as strongly now as it was in the first quarter and early in the second quarter. Our experience is that it's pretty much on the same trajectory, which is not it's not at a rapid rate of ascent, but it's definitely ascent at just about every business. I mean, if you look at our brick business, which is directly tied to construction, that's flat. If you look at insulation, that's come back just a touch. But the country is coming back, but employment lags. I mean, if you look at, take carpet, we sell 40 or 45% of the broadloom carpet. We in Mohawk are 80% of the market. So we went from 13 million yards a week down to 7 million yards a week. We laid off 6,500 people. We've come back to 9 million yards a week. We really haven't added people as much as we put on over. We really would like to see a little more demand. If we get to 10 million, or between 9 and 10 million, we start adding sort of in proportion to the sales. So it's coming back. It hasn't come back as fast in employment as it really has come back in sales, but it is coming back.
And what will get you to actually hiring more people instead of doing the overtime?
When the overtime isn't working that well anymore, or part-time. And now we've added a lot of people back in the railroad, for example. We've even added a few people back in some of the residential construction thing. But demand is what causes us to add. If you gave us a payroll tax holiday, if you gave us a credit for each person, but in the end, the reason to add people is because you've got demand for the goods. I mean, there's no sense turning out a bunch of carpet that isn't moving, and demand is what's needed.
And you'd probably extend that to the economy as a whole.
Sure.
But also add anything else that you would see about the economy as a whole, and bring in Europe, because I know that you have got some concerns about what is happening in Europe.
Yeah, but we have, Europe, from a financial standpoint, we'll get to, in terms of its business, it's coming back somewhat too. We have two businesses that in particular get a reading on what's going on. We have something called TTI, which sells really tens of thousands. It distributes, it doesn't manufacture, it distributes tens of thousands of electronic components and to tens of thousands of customers in Asia, the United States, and Europe. Businesses coming back, we're setting records there. I mean, their sales are considerably higher than they were at the peak. That stuff is moving, and these are moving by the thousands of orders a day that go out. And they're increasing in Europe, they're increasing in Asia, they're increasing in the United States. Now, we have another company called Iskar that makes the little tiny tools that go in big machine tools. Their business is 50% higher than it was a year ago. Now, it isn't back to the peak by a long shot, but it's improving in Europe and Asia and the United States. Improving more in Asia than the United States, improving more in the United States than in Europe. But nobody is buying tiny little cutting tools, for speculation or because they like to put them, in their recreation room or anything like that. They are getting used in industry, and they are an index of how busy machine tools are. And Europe is not. It is improving.
Oh. And let's move to Europe financially. Let's think about the big financial picture.
I don't want to, but go ahead.
No, I know you don't. Nobody here much wants to think about it. But when you look out there at the financial scene, what really concerns you, and would Europe be among them?
Yeah, Europe is the big unknown in terms of the financial scene, because here you have 16 countries that in effect have given up the right to their own printing press. I mean, when people talk about the United States going bankrupt or something, it's nonsense. I mean, as long as we issue debt in our own currency, the only thing we have to worry about is a printing press breaking down, and we'll fix that if need be. So you can't go broke if you issue debt in your own currency. But 16 countries gave up the right to do that. And if Greece could print its own currency, you might have enormous inflation, but you'd never have a default on debt. And so you now have 16 countries that have sort of bound themselves to a synchronized and somewhat consistent fiscal policies in order to have this monetary union work. And that's a big problem. I mean, just imagine if the United States had a North American economic unit or a Western Hemisphere economic unit, and we tied ourselves to Canada and Mexico and maybe to some of the countries in South America, and we said we're all going to have a currency and it'll tie together. And everybody's going to follow the fiscal policies. In the European Union, originally it was 3% they wouldn't go over in terms of their deficits to GDP. But what happens if, name a country, Mexico or Argentina or whatever it might be, goes their own merry way? Will the United States citizens decide because we've got this commitment, we'll let these guys who have gone off the reservation, we're going to, in effect, stand behind them. And that is being tested in a huge way. We didn't do that well, if you look at public opinion, in terms of cooperating to save ourselves a couple of years ago. People are still grousing about all the things that happened when we were saving ourselves. And I want to say publicly that the people in important positions, both in the Bush administration and the Obama administration, I think have done a fabulous job of getting us out of something that really was almost life-threatening to our economy. But just imagine if we were tied in 15 other countries in this hemisphere, and we had to follow policies which kept their stability maintained when they were doing a whole bunch of things we really didn't like. I think the European Union really gets tested. And I don't know exactly how it comes out. And I don't think this is necessarily the last test. I mean, this is something that's designed to last forever. So people should always distinguish between debt issued in your own currency and debt issued in somebody else's currency. And it can get very difficult. Korea in the late 1900s, 1997 and 98, they owed a lot of money in other currencies, and they had a terrific crisis at that time. But we will never have a crisis in the United States as long as we keep issuing debt in our own currency. Now, if people get suspicious enough of you, they won't let you do it anymore, and then you have to issue some reserve currency.
Well, and what does the accumulation of debt in the U.S., what does it say to you and to your thinking about investments as you look forward? What about the inflation picture?
Well, if we run the printing presses fast enough, I mean, eventually it gets monetized. I mean, even though you've got a strong Fed and independent Fed, you can only be independent so far if they're shoveling out government securities. So we are following policies that, unless changed, will result in lots of inflationary problems, in my view, down the road. And not next week, not next month, but if my partner Charlie Munger says, all I want to know is where I'm going to die, so I'll never go there. Well, we have started down a path that you don't want to go all the way down.
Okay. Now, staying on a little bit more narrow part of the financial picture, what about the Dodd-Frank Act and the regulations now being written to put it into effect? How do you feel about that act?
Well, I think it's important to do things that rein in, to some degree, the casino aspects of Wall Street. I'm not getting into the credit card. I'm thinking about the finance end of it. And Wall Street is a strange place where it does a lot of good things, and then it has this casino. I mean, it's kind of like a church that's, running raffles on the weekends, or something that's appealing to both sides of human nature. So and the money tends to be more in the casino end sometimes as you go along. And people like casinos. I mean, think of it. I mean, 50 years ago when it was Las Vegas, I mean, people went thousands of miles to do things that were mathematically unintelligent. I mean, I went through there on my honeymoon in 1952, and I saw all these well-dressed people, high IQs, doing mathematically unintelligent things as fast as they could, and they'd come 1,000 miles to do it. I thought, I'm going to get rich in this country, So people have a propensity to gamble, and it gets made easier and easier for them. And of course, when you get into huge derivatives positions and that sort of thing, it makes a mockery of the margin rules which were put in after the 29 crash in the early 30s. The government said, we have an interest in people not being able to go wild on speculation because it's led to the 29-32 crash. So they put in margin rules. We've still got them on the books, and they've been made totally meaningless by what people can do in derivatives. So I think anything that tends to rein that in is a plus. And I think we went to some degree in that direction. I think one of the problems we still have is we probably have unbalanced incentives for the managers of huge financial institutions. And, people talk about moral hazard. And moral hazard, being the fact that if somebody bails you out from something dumb you've done, you'll keep doing dumb things in the future. There is no moral hazard in terms of big financial company's stockholders. I mean, if you were a stockholder of WAMU or Wachovia or Citigroup or AIG or Freddie or Fannie or you name it, you have lost anywhere from 99% to 90% of your money. Losing 90% of your money does not make you think, that you're going to get bailed out. The common shareholders did not get bailed out of those institutions. They lost hundreds and hundreds and hundreds of billions. But the managers of those institutions, in all cases, to my knowledge, went away rich. Now, they may not be as rich as they were before. So the moral hazard exists, in my view, with the people that become CEO, not with the common shareholders. And I think there ought to be terrific downside for anybody running an institution where society has to step in and help them for the good of society. And that hasn't been the case. And I think that something ought to be done about that.
What would you do?
Well, we'd shoot him to start with. I think if you run a huge financial institution and you've got hundreds of millions or billions on the upside, I think if you run that institution in such a way that the federal government comes in for the benefit of society to save the institution, even though they don't save the common shareholders, they shouldn't save you either. I think you should go broke. And I think your wife should go broke too, which I hope I'm not ruining a lot of marriages out there by the suggestion. But I really think that you should not be better off than the 9.7% of the people that are now unemployed in part because of some of the actions that you took.
I'm
very Old Testament when I get going.
Let's move just for a bit to politics, which I'm sure interests this audience. You, of course, were an Obama supporter.
And I still am, yeah.
Right. I certainly wanted to ask about that. And he's not only that, but he's been supplying you with ties.
He's been supplying, yeah. The last time I met with him, he pointed out my tie was frayed, which since that time I've gotten 4 ties. I wish he'd say my suit was frayed.
Can you add anything about the Obama administration and what you wish they were doing more of, or what you wish they had done less of, or anything like that?
Well, it's an interesting problem that he has because, we've talked about it before. If you want a marriage that will last, not necessarily a marriage made in heaven, but a marriage that will last, what do you look for in a spouse? I mean, do you look for character, humor, intelligence? No. If you want a marriage that will last, you look for someone with low expectations. Now, the president and the American people have a marriage. I mean, and when the very act of becoming president is raising people's expectations. There's no other way around it. You can't go in and say, if I come in, things are really going to be bad. It isn't a question of Obama or anybody else or McCain. I mean, your job to get elected is to raise people's expectations about what's going to happen. And it's very easy to raise them to an unrealistic level. And then you face the problem when you come in of resetting those expectations to what's really doable. And that is particularly tough when what is really doable in any short period of time may be fairly limited, and when expectations have been raised as high as they were in this particular campaign. That's nobody's fault. It's just a reality of where we are. And therefore, with these people, with the American population, people that voted against them, they feel vindicated in some way. The people that voted for them feel disappointed because they just got their expectations too high. And that's a problem to deal with. But it's not surprising to me at all that that's what's happened. I spent a lot of time at Berkshire trying to keep people from having unrealistic expectations. When I set my partnership, the first one in 1956, I sat down with 7 people, and I just tried to get proper expectations in place because I don't want to be held to things I can't do.
Let's shift to China.
Okay.
You've just come back from China. You spent 4 days there last week. The main purpose was well, maybe not the main purpose, but a purpose was to visit the BYD plant.
That was the main purpose.
In which Berkshire has a very large investment. You also held a dinner for Chinese billionaires to talk about the Giving Pledge, which has been started by Warren and Bill and Melinda Gates. Overall, this is 5 years ago you'd been in. Was it 5?
Well, 3 years ago I was there for 1 day. 15 years ago I was there for 17 days. Those were the only 2 trips.
Time. And first of all, tell us about the change. How would you measure the change?
Well, it's hard to even have words to measure the change. I wouldn't have said it was possible. I don't think they would have thought it was possible. It is as dramatic. Now, I'm talking about the eastern part of China, but it just blows your mind away. I mean, just take BYD, which is a company we visited. Here is a company that started with $300,000 in 1995, went into the auto business in 2003, run by a guy that's 45 years old. They now have plants that, if converted to one plant, would be 1,000 feet wide and 20 miles long, half the distance from here to Baltimore, roughly. I mean, and it just happens like that. I mean, you've got an enormously cooperative government. I mean, particularly in Shenzhen, where they happen to be their headquarters. The government wants them to succeed, and they want them to succeed fast. You've got a management and a labor force that feels the same way. So when you get government, management, and labor all working on a common goal with a huge sense of urgency, miracles happen. And I really had trouble almost believing what I was seeing.
Well, you've always had, to kind of line that up parallel against what you saw in China, you always had this enormous faith in the American system.
Absolutely.
Still do. That continues.
100%.
100%. Why do you think that's so strong in your thinking?
How could you think anything differently? I mean, here's a group of 300 people. You go back 225 or so years, the people would be just as intelligent here. They would be working harder than they are here, and they'd be turning out virtually nothing compared to now. I mean, it isn't because we've gotten smarter. It isn't because we work harder. It's because we got a system that works. I mean, we have had a blossoming of the human, reaching the human potential. We haven't come close to reaching it yet. That just results year after year, decade after decade in these incredible improvements in human output. Even in the last 10 or 15 years, just think of all the things you can do now that you couldn't do 10 or 15 years ago. I mean, I don't do them all because I can't figure out quite how those damn things work. But in information, everything. So this in the 20th century alone, I mean, we had the Great Depression, we had world wars, all that sort of thing. The Dow Jones started at 66 and it ended at 11,400. That is not an accident. And it isn't because we got smarter. It's because our system unleashes human potential. And mankind went for millennia, really, and went no place. I mean, they essentially, potential was locked up in them. But here are 300 people, and, 100 years ago with this group, they wouldn't have realized their potential. People around them just would assume they didn't have that potential. And now it gets unlocked, and that game is not over. No, I'm enormously bullish about America.
By the way, a long time ago, or not a long time ago, but some time ago, Warren mentioned to me that he and I have each lived more than a third of the history of this country, which is an amazing fact. And if you just think of your own age, you won't find anything that impressive.
Put us end to end, which nobody ever has, but put us end to end, and we're back well before the Civil War, and then add one more to us, and we're back before the Revolutionary War.
It's amazing.
And look at what has happened during that period. You can't say it's an accident. It is the product of a system of equality of opportunity, of a rule of law, of a market system. None of them perfect, and the fact that every one of you is not satisfied with where you are now. I mean, you've accomplished a lot, but you've got bigger ideas, and those bigger ideas will come true.
I'm going to ask just one or two more questions and then open it to questions from the floor, so please be thinking of good ones. Now, you write your own chairman's letter in the annual report, and I just want to mention that because there are many people here who are involved in communications in their companies. What do you think when you read most of the chairman's letters and other annual reports?
I want to throw up. I find it very irritating, actually, because so many of them are, they're written by the Investor Relations Department or the Public Relations Department or something of the sort. You mentioned I think it's over 70 businesses now. And in effect, Berkshire Hathaway is the shareholder, the 100% shareholder of all of these different businesses. In effect, I'm the board of directors, and we've got these operating managers out there. They send me reports. They don't send me reports with their pictures, or all of this other stuff. They send me reports. They tell me what's going on. And I want to know what's going on in those businesses. I want to know from their standpoint exactly what they see as the upside, the downside, the pluses, the minuses. I want facts from them. And, when I write my report, I have in my mind the image of my two sisters, Doris and Bertie. And they're very smart. They've been away for a year. They've got their money in Berkshire, so they'll read as long as I make it halfway interesting. They'll read as much as I want to tell them. They want to know what I think about the business. And they don't want a public relations document. It says annual report. And they're entitled to know exactly what I think about the business, the good, the bad, the ugly, whatever it may be. And I really feel that somebody that's got my money in another public company, I want the CEO of that company to sit down and write me about it. And if he can't write me about what's going on in the business, I've got some real questions about him. Notice I didn't say her. All the women's reports are very good.
Some of them will be cheering out there in the audience. One more question.
Carol, I have to say that Carol edits my report and does a superb job. She's been doing it since 1977, and I would not get the letters I get if Carol didn't do this editing job. And she has this wonderful technique because protecting the male ego, she has all kinds of comments, but she will write something like, "This is my least favorite part of the report," which means she thinks it's a bunch of junk.
Okay, now, Warren, I'm also going to ask you another kind of management question. I have this feeling that if I ask you how good you were at firing people, you might tell me that was not one of your strongest points. Can you talk about that a little bit?
Well, I tap dance to work. I love what I do. I can hardly wait, till tomorrow morning in terms of my job. Only thing I don't like is I hate firing people, and it's particularly a problem at Berkshire. We've got a lot of managers, and we have no retirement policy. So we have, and we're going to keep it that way, incidentally. We've got managers that are several very good managers that are in their 80s. We've got one that Carol knows that's getting close to 90. On the other hand, some of them fade out much earlier. And since we don't have a retirement policy, I can't just say, well, everybody at 65 is out, and you're still at the top of your game. But that's just the way it is around here. If I'm going to let somebody go, and I'm not going to let them go while they got a lot of talent, because talented people are too scarce to start tossing them aside based on age, as far as I'm concerned. So when I let somebody go, they know I think they passed the top of their game, or there could possibly be some other reason, but that's the main reason. And that is a very tough thing to do. We had one manager who was a wonderful guy. Charlie and I loved him. We didn't see him very often. We don't see most of our managers very often. They don't want to see us. But and this fellow actually developed Alzheimer's, and we didn't spot it. We'd only see him periodically, and he'd sort of get up for it. But believe me, it is tough to go and finally confront somebody and say, the time is up. Now, the interesting thing about him was his business did great while he had Alzheimer's, and so we now have a rule at Berkshire that we only buy businesses that are so easy that a guy with Alzheimer's can run them.
Okay, I'd like to look out there in the audience, and who has a question? Right back straight from me. Right there. Would you raise your hand so you can get a mic? Is there a mic? Here we go.
Thank you for such an inspiring session. My name is Dayton from Nigeria, and my question, you spoke so glowingly about China. We actually mentor and coach a lot of young people in Nigeria, and I'd just like your thoughts on Africa, particularly Nigeria, in terms of small business development. What do you see? What's possible for us? Did you get the question?
What particularly in China?
Nigeria. She's from Nigeria, and she's wondering about activities and business activities in Africa and prospects for small businesses and financing.
Well, I don't know what 10,000 women might be doing in an area like that. I would say this, that good people are so scarce that they jump out every place. I didn't realize that when I was in school. I mean, it is astounding to me how many people sort of do sleepwalk through life, but then there's these others that just jump out that do extraordinary things. And so I think, I don't know the specifics at all, of her operation or Nigerian business generally, but I would say that in most places in the world, it's getting, certainly now in China, which was not the case 30 years ago, certainly in the United States. I mean, if you've got ability and drive and a passion for what you're doing, you don't have to have 160 IQ or anything like that. I mean, particularly in the investment business. I've always said, investment business, if you've got 160 IQ, sell 30 points to somebody else. You don't have to be that smart, fortunately. If you've got a passion, that's what I really look for in our managers. I mean, if there's one quality that I want to see in their eyes, hear in their voice when we talk about their business, I want to see passion. And then you should try to work in reasonably fertile soil in terms of the business prospects. You want to get on a train that's moving forward at 30 or 40 miles an hour, preferably 80 or 90. You don't want to have one that's stalled, but so you don't go in the horseshoe business or we were in. I started out in the windmill business. It's finally come back, but you had to wait 50 years or something. Don't do that. But I just say find your passion. If in terms of financing in this country, we've just started something. Talked about a little last night. 10,000 small businesses, and I saw 23 people graduate on September 22nd. I will tell you, those 23 are going to succeed. They already have succeeded. They are, to some degree. They probably average 40 or 50 employees already, but they're going to do better. 23 entered the course, 23 finished the course. They got a great curriculum. Michael Porter worked it out with Wharton and Babson, and then you got a terrific community college in LaGuardia Community College that implemented it, and those people will succeed. In addition, there is financing available on there. I really don't know any of the specifics on Nigeria.
Over here.
I have a question about confidence. I'm Abby Cohen, Senior Investment Strategist and President of the Global Markets Institute at Goldman Sachs. You discussed before that business confidence is coming back. Businesses are reinvesting again, buying equipment. They're just beginning now to hire new workers. But there's still a real gap in consumer confidence. What do we do about that? What do we do about the lack of investor confidence? Many investors, portfolio managers, not yet confident enough in the future to buy equities. And we see, however, that portfolio managers are so nervous they're buying bonds at historically low yields and very high prices.
They're making a mistake, the ones that are buying the bonds. The confidence, it's interesting. It leaves the room, instantaneously. It sort of comes back one at a time. And we had a blow to this economy of a type that we've never had before in September of 2008. I mean, we came so close to having this economy implode. It is scary. The only one that could have saved it was government, and fortunately we had the right people in government that did it. I don't know whether Sheila Bair is here, but if she's one of those, I would salute if she is. That is not a wound that that heals immediately. It comes back slowly, and people are now more confident, obviously, than they were a couple of years ago. The first 3 days after Lehman, money market funds which held deposits which were equal to half of all the deposits held by American banks, domestic deposits, they lost 5% of their deposits in 3 days. Commercial paper stopped. Everything was coming to a halt. The business people I knew, most of them were terrified. I mean, you had people running huge businesses that didn't know whether they're going to meet a payroll because they couldn't sell their commercial paper. Unfortunately, the government stepped in fast to guarantee that. Otherwise, you'd be amazed at what bodies would have fallen in the succeeding 3 or 4 weeks, and then the domino effect would have been incredible. So that is something that you don't get over in a day or a week or a month. But it does come back. But I have seen greater lacks of confidence in common stocks in the mid-'70s. I mean, stocks in 1974 were far cheaper than they are now. I saw a lack of confidence in cash. Cash is trash back pre-Volcker, or pre-Volcker's final actions, in the 80-82 period when the prime rate went to 21% and long-term treasuries were very close to 15%, and people felt the dollar was going to become worthless. So we have gone through periods of fear before. There's a lot of similarities. There's always some differences. This one was a financial panic like virtually you've never seen, and we came back from 74, 73, 74. In fact, that was a time to be buying stocks. In my view, it's quite clear that stocks are cheaper than bonds. I mean, I can't imagine anybody having bonds in their portfolio when they can own equities, a diversified group of equities. But people do because the lack of confidence. But that's what makes for the attractive prices. If they had their confidence back, they wouldn't be selling at these prices. And believe me, it will come back over time. I have no worries about that at all. I have no idea when. I mean, it's much easier to predict what will happen in securities markets than when. I'm no good at timing, never will be, and I don't think about it. When Charlie Munger and I talk about buying something, we don't spend 10 seconds on macro factors. We just decide whether we like the business or a little piece of the business if we're buying a stock. We decide whether we like the management. We think about what it'll look like 10 years from now, and we decide whether it's cheap or not.
That's worked.
It works, and it'll continue to work,
Over here, right there.
Pamela Jones Harbor, Fulbright and Jaworski. Mr. Buffett, 2 years ago when the economy was on the precipice of going over the cliff, you generously and wisely invested in the economy and in this country, and it is rallying. However, unemployment is hovering around 9.8% the last time that I checked. If you were going to give advice to our government, to the people of the United States, what would you tell them to try to bring down this unemployment figure?
If I had any good ideas, believe me, I would. It isn't like I would want to hold back on them. I can tell you that it will improve. I can also tell you it will probably improve quite slowly. In my view, there are three factors that sort of enter into economic developments on a macro scale in this country. And we hear a lot about two of them, which are monetary policy and fiscal policy. But if you go back to the 19th century, we had 7 or 8, they used to call them panics then, they became known as recessions and all that. Nobody ever even heard of fiscal policy or monetary policy in those days. What happened was that this regenerative capacity of the American system worked its magic. And it's done it time after time after time. In my view, having good fiscal policy makes sense. Having good monetary policy makes sense. Those two factors are overwhelmed by what I would call the regenerative capacity of the American economy, which is alive and well, but it does not work in a way that you can see tomorrow. I mean, you can always change monetary policy tomorrow and you say we did something. And you can argue about what fiscal policy should be, and you have the feeling you're doing something. I regard both of those as much less important than generally it's much easier for the media to talk about it, or politicians to talk about it, or business people to talk about. And this other unseen factor, what has brought us back time after time after time. I mean, it's, 100 years ago was the Henry Ford, was tinkering someplace, and, he comes up with an automobile, or Orville Wright's, maybe an airplane, or Bill Gates in Albuquerque, coming up with software, or you name it, the Google guys, not that many years ago, coming up with what they did, or go to the movie and see how Facebook developed. I mean, it's all out there. But you can't predict it ahead of time. If you go back to 1920, there were 105 million people in the United States, about a third of what we have now. 105 million people. 32% of them lived on farms. So you had 32 or 3 million people living on farms. Now, today we have 6 million. If you had said to those people in 1920, 26 million of you are going to have to leave the farm and find something else to do, you'd have said, what the hell are they going to do? They'll be flooding it, and then we'll have more people coming in. This country's destined, for the trash can. But things happen. It's a dynamic society. So now we have 2% of the population, as against 32% of the population, turning out all the food we need and enough for some exports. If you go back to 1820, you had 72% of the people on their farm. And if you said tractors are going to come along and combines and they're going to do all this work for you, you say, well, we're all going to be unemployed. That isn't the way it works. What it happens is you unleash this potential, and they leave the farm, and they find other things to do, and that's going to continue. But it doesn't happen in a way that you can spot it day by day. And if I knew some great way to kickstart the economy, in a way that would take unemployment down a point in the next 6 months, I wouldn't be bashful about saying it. I don't know that. What I do know is that, when we meet 2 or 3 years from now, for sure, unemployment will be far less and the economy will be humming considerably more.
Well, that was a good commitment you made right there.
I was fishing for an invitation, actually. Hattie, where are you?
Over here.
Morning, Eileen Odom. My question, or I guess I'd like to hear your thoughts on the increasing income distribution in our country, both in real terms and relative to the world. It seems on one hand that is a demonstration of the success of our system, but I think there's other, perhaps, challenges with that. So,
I think it's terrible what has happened. I think a market system is very desirable, and there need to be some restrictions someplace, but it produces extraordinarily different results. You can go watch a middleweight fight on Saturday night on pay-per-view, and the guys are getting millions of dollars, and you won't be able to remember the names of the fellows the next week. When Joe Louis fought Max Schmeling back in 1937, his gate was limited by the size of Madison Square Garden, or wherever they fought for 25,000 people or something. Some guy that invented television, then invented cable television, then invented pay, turns out to pay out enormously for these fellows who are fighting. And they get these incredible earnings from society and a market system. And I'm all for it. If you want to watch that on Saturday night, it's fine. And they pay a lot of money to do it now. But that guy is not independently responsible for the fact that he is having these showers of money dumped on him. Society as a whole creates that. And, I got a lucky straw in society, so I can allocate capital. If I'd been born a long time ago, as my friend Bill Gates constantly points out to me, I would have been some animal's lunch, because I can't run very fast and I can't climb trees, and and I'd say, well, I allocate capital, and the animal would say they're the kind that taste the best, and so I'm lucky. I was born in the right place at the right time. It doesn't mean I'm a superior human being or anything of the sort. And some guy that goes over, and as I wrote in my pledge letter, some guy goes over and dies in Iraq, his family gets a medal and an honorary burial. And some great teacher gets a thank you note from the parents. I can spot the differences in value, and I get paid enormously in a market system. The tax system is, I don't believe in trying to get into comparable worth arrangements in terms of what people get paid or anything like that. The tax system should do something, in my view, when you have an enormously prosperous economy. And bear in mind, we have over $45,000 of GDP per capita in the United States. the tax system should do something so that the people that go to Iraq and Afghanistan and to get the short straws in life, benefit in this overall cornucopia of prosperity that we have. And my tax rate, counting payroll taxes, I'm in an office of 21 people. I have the lowest tax rate in the office. And that counts, secretaries, answering the phone, everything else. I've got the lowest tax rate. I have no tax shelters. I have no tax accountant. My only tax advisor, or my tax shelter really was the Bush administration. I mean, they took care of me. They thought, here's this endangered species, kind of like the bald eagle or something out in Omaha, and if we don't take care of this guy, they'll all quit working and we won't have any arbitrageurs anymore or hedge fund operators. So we've got to give this guy a special kind of break. And so I pay a lower tax rate. I pay a lower tax rate probably than the cleaning lady that comes in. And it just isn't the way the system should work. We're going to need 20% or thereabouts, 18, 19, 20% of GDP to fund the kind of things that we all believe are right to have in this country. And you've got to get it from somebody, and nobody likes to pay it. Russell Long said, you said the Senate Finance Committee, don't tax you, don't tax me, tax that fellow behind the tree. Well, the fellow behind the tree should be the guy that's making a lot of money at very low tax rates. And it's gotten distorted in this country, in my view, to a huge extent. You got to get it from somebody, and if you're not going to get it from guys like me, why should we get it from the people who serve us lunch today?
So